Okay, folks, welcome to the member stock pick request video. This is where we take requests from our members to review stock charts for stocks that they're interested in. They're not necessarily names that we're watching per se. Some of these names I've never even heard of before, but my members happen to be very astute in the names that they're watching, and sometimes they turn out to be good trades for all members to join in on. And it's a service free of charge to members. So let's begin with JAZZ. And this is a request from fellow member Terry. JAZZ is a pharmaceutical stock. I always say that, always say pharmaceutical due to the fact, or biotech, because they have a tendency to be very, very volatile. So I just caution everybody about getting too heavy on these stocks because many times they're one-hit wonders, and one day could just destroy your account if you're too overly weighted. And believe me, I have been there. Okay, so JAZZ, this is a daily chart, good double bottom setup. We've had a nice rally. We broke out above prior highs at 159.14. We flashed the topping tail at 163.68, and we're inching our way back up to that level. I don't like it. I don't like the fact that we had a pullback off of Friday's highs. It means that as we near this prior resistance level, you have people that are taking money off the table in anticipation of resistance at this level. So I would much like the stock on a pullback. The stock is in a long-term uptrend. Good double bottom. We know our support is. We need to see a pullback, a bottoming tail, such as we had here and here, and we want to draw a trend line up. That'll give us our, not only our area where we can buy the stock at off of support, but it also tells us exactly where we want to put our stop loss order. So Terry, this is not a buy to me at this point in time. I really need to see a pullback on the stock. So really it's just a watch right now. Next stock up, this is also from Terry, another pharmaceutical stock, QCOR, Questor. This one I'm a little bit more optimistic on. Not that JAZZ is bad, it just had a nice run, that's all. So this one here, QCOR, has yet to have a real serious breakout. That breakout point is at $74.01, 2 cents, and last seen back in August of 2013. I would like to see a close above this support level. Actually, scratch that. I would like to see a close above this resistance level. This is a weekly chart. Let's see if there's any historical resistance. No, there's not. So what that tells me is the fact that we don't have any old buyers back here waiting to get made whole again on their investment from many years ago. That tells me that once we get that breakout and a close above 74.01, well then look out above, because the stock is probably going to rally and it's not going to be challenged because, again, no overhead supply. Next stock up is EEM. This is from Ajay, and EEM is the iShares, and we know that this sector, the emerging market sector, has been beaten badly. So we have a huge short covering rally, topping tail at the 50-day moving average. I don't think that this is a long, because we backed right off the 50-day moving average. I would need to see the 50-day moving average level off, some consolidation, and then perhaps a breakout would make me interested on EEM. As of right now, I think it's a short squeeze, and you can see the up volume bars are declining. I don't think this is going to last long. We're probably going to get a pullback. Let's take a look at the weekly chart really quick. Yeah, we have a lot of resistance up here, and our volume dropped off last week. So really what you need to keep this ETF moving higher is institutional accumulation, and it's questionable whether or not we're going to get that. I like the bottoming tails seen 2 weeks ago. That's a sign of support. So if we get a pullback, you could probably get involved with it at, say, $36.84, $37 per share, and put a stop loss just below that level. However, I wouldn't be a buyer of it into resistance. It could head higher for all I know, but really the risk to reward is not on our side right now. I would need to see a pullback. Next stock up for AJ is CAF. This is Morgan Stanley, the A-share fund. Good breakout on a daily chart. Resistance at 23.95. We know we have a lot of buyers up here looking to get made whole. Same back here. So I wouldn't be a buyer of CAF early next week. I need to see either a pullback or a breakout, meaning breakout above support and a close above support. And that would make me somewhat more bullish and willing to bet that they'll be able to beat back these sellers. But right now, it's really in no man's land in between the 50-day moving average. You already have signs of topping. You saw it on Wednesday, Thursday pullback. We gapped up on Friday, but you could see the little topping tail, meaning that you had some sellers come in. So I wouldn't touch this one right now. It's really a show me stock. It's got to close above this support level or a nice pullback before I got involved with it. Next stock up is for fellow member Fernando, RFMD. He also wants MU, Micron. This is a daily chart of RFMD. You could see that we flashed a topping tail on Thursday. We gapped higher on Friday and reversed. That's a key reversal, bearish key reversal. We do not want to be buyers into that type of price action. The buyers back here are looking to get made whole. I need to see a pullback, a real serious pullback for that matter. Ideally, probably down to, say, 560, and then I would look to get involved with RFMD. Let's take a look at the monthly chart. This used to be a .com darling. And the monthly chart, it looks really, really good. So we had a rally off the 09 lows, pulled back, long consolidation. We get a close above $6.20. The stock goes to $7 and then $8.48. I think that RFMD on a longer term basis is a good trade. In fact, we have an inverted head and shoulders setup. It's basically a head and shoulders setup turned upside down. And that's what's setting up here. Very, very powerful move. So RFMD on a longer term basis, not as a trade, looks very, very good. I love the bottoming tail here at $4.50. But if you're looking to trade it, you need to get that pullback and then a rally higher. If you're looking to, as an investment, begin to nibble and pick some more shares up on a pullback. And then when it breaks out, finish your buying. RSI looking really good. Love the monthly chart of RFMD on a longer term basis. Daily chart, you need a pullback. MU daily chart. This one's been on a tear. I don't like the sector. I never have, although I did make a lot of money on MU. It's one of my first stocks that I ever traded back in the 90s. And it is a commodity stock. It's in the DRAM business. So nice uptrend. I like these pullbacks, these what you call flagging formations, flag formations. And you're not seeing that right now. You're seeing sideways consolidation, which is okay. But if you want to open up your position, that's fine. Just use a stop loss just below this blue line here. Now, we know the semis are breaking out. We know we need to take a look at the longer term charts because they're probably going to head higher. MU is considerably more overbought and extended than what RFMD is. You can see that the RSI on a monthly chart is at 84.87, so it is extended. That doesn't mean it can't head higher. In fact, the probability of it heading higher, I think, greatly outweighs it heading lower anytime soon. So I like the consolidation here. You can see there's some sellers up there by virtue of the topping tails that are on these candlesticks. However, once you get a breakout, you're all good. And with all of these semi stocks, you have to remember from the dot-com crash, there's a lot of overhead supply from many years ago. You may think, wow, that's 14 years ago. Who's still holding? There are people still holding. Trust me when I tell you. and they want their money back. They've been waiting for 14 years. Wait for your pullbacks. Wait for your consolidations. Do not chase these stocks because you will have opportunities to get long. Next stock up is UNXL. This is for fellow member Kevin. Unipixel. It was a little NASDAQ stock. We're right at resistance. We need to close above $10.96. Nice double bottom setup. Put in a higher low. We need to see a close above $10.96. Then the stock is a buy. On Friday, it flashed a key reversal. No big deal. I don't think it's going to crash and go to zero tomorrow. It's just going to have to do some backing and filling, and then you got to get that breakout and a close above the support level, and then it's a buy. Unless we get a pullback to this lower band here, and then you can pick up some shares at that level, let it rally higher, and then finish your buying on a breakout above 1096. Good higher low on the RSI. Good little stock. Let's take a look at the weekly chart because now I'm curious. All right, nice support at the 200 period moving average. Let's do this. We look at the charts on a weekly basis because the weekly charts make us smarter on a longer term basis. There's a lot of value in the weekly charts. And I'm going to show you an observation that I've already picked up on with this stock. Okay, so weekly chart RSI is breaking out already. Note the declining downtrend line. The RSI is already breaking out while the price action is still at the lower band of this pennant formation. So I like the weekly chart quite a bit. And when you take a look at the ultimate oscillator, we're putting in a higher low, very bullish. Good little stock. So Kevin, hope this answers your questions. Good little stock you got there. Next stock up is for fellow member Chris. He wants me to take a look at EXEL and MACK, M-A-C-K. And EXEL daily chart, I can't say that I'm all that constructive on this chart because the first thing that jumps out at me is the lower high on the RSI. And I'm a big RSI guy. Secondly, the price action is confirming the RSI. You are seeing lower highs, very bearish to me, and you have a topping tail and resistance at $7.40. So as a long, I am not constructive on it unless, of course, it pulls back to 7, flashes a bottoming tail, or it breaks out above this declining downtrend line. So this one is really a watch stock right now. I wouldn't buy this one on Tuesday. Next stock up is MACK, M-A-C-K, in a triangle formation. Not breaking out yet on the RSI. Resistance, as noted by the topping tail, seen on Friday. Again, it's a show-me stock. It's got a pullback either to this lower band of the rising uptrend channel and very short-term uptrend channel. Technically, the stock is now broken down. But if we get a pullback to the lower band here, you could buy it, trade it up to the upper band, and ideally get a close above this upper band of the declining downtrend channel, and you can begin adding more shares. There will be resistance at the 50-day moving average, no doubt, and that's flattening out. And here you can see, here was our uptrend line, and it broke a couple of weeks ago. So I'm not all that constructive on MACK. Next stock up is for, actually the last two are for Paul, REGN and KNDI. REGN, Regenerion Pharmaceuticals, weekly chart, breaking out on a weekly basis, looks good on a weekly chart. Very, very good volume. Good support on the RSI. Not very much I don't like about the weekly chart. Now on a daily basis, you're seeing some congestion up here. So don't be a bit surprised to see a pullback, maybe to 305 and then a continuation move higher. So you have some noise on this daily chart, but the weekly chart looks pretty good. Kandi Technologies, KNDI, this is the last stock that we're looking at. Weekly chart, topping tails. Everybody knows I hate topping tails, the sign of selling pressure above. Double top on the ultimate oscillator. You need to see this Stochh RSI, this pullback. You need to see a double bottom setup. That's what's jumping out at me. Nice bottoming action at $10.90. Let's take a look at the daily chart. If you had to buy this stock, I'd use a stop loss just below $12.34. Even that's a little bit too far from me because I think that you could still see more pressure on the stock. Ideally, I would buy the stock on a breakout above $14.75 and then $15.39. I think the stock does go higher. It's just a question of what your risk-reward tolerances are. And the weekly chart is just showing topping tails, and I can't ignore it. It bothers me so. Can't ignore this. That's a bearish chart on a weekly basis. So, and you can't ignore the prior resistance of 1539, so we're setting up for a lower high. In fact, we did put in a lower high. It doesn't mean sell it, it just means caution, and I don't think it means buy it. So I would not be a buyer at this point in time of KNDI. And that's it, folks. If you have any questions, shoot me an email. And if you're watching this on YouTube, please subscribe to my channel. If you watch this on the homepage and you want my best stock picks video each week, along with the member stock pick request video, plus some trade tutorials on how we trade stocks with a contrarian trading style, just enter your email address. We hate spam too. You will not be spammed. Talk to you soon, folks.